Hi, welcome back. This is just an introduction. I'm going to share with you a video. It was an interview done by Aaron Korbs with a student of mine. I thought long and hard actually about sharing this. This interview was recorded and published on YouTube several months ago. And I'll just explain. This is just an introduction of why I'm doing this. As I said, I thought long and hard about sharing this. I often get asked about for people to say, "Oh, can you send customer testimonials, things like that?" And I just don't go down that road. And I'll explain a little bit about that. Essentially, every junk trading course operator has loads of glowing testimonials, and in my opinion, testimonials are just worthless. You don't have to be good at what you do in this business, to generate these good testimonials. Whether they're real, not real, I just don't know. So I don't go down that road. My website has no testimonials. I've always had the view, if people trust me, they'll come to me, and if they don't trust me, well, that's fine. They can go somewhere else. I'm not aggressive marketing in that way. So to me, the people that have testimonials and are showing their trading statements and things like that, they're generally most of the con people in this industry and the people that are selling dreams. And I just don't want to be going down that avenue. If you don't trust me, then that's okay. Haven't got a problem with that. But I've been asked a number of times about various things, and I just thought I've watched again Andy's interview, and I am proud of the fact that a number of my students have gone on to do very well, but not just in terms of trading, in terms of P&L, but I mean in terms of going on to get jobs as bank traders and hedge fund traders. Now, I've said before, I have taught traders at every investment bank that I've worked at. But I'm also proud of the fact that some of the retail traders that I've taught over the years have gone on to become hedge fund traders. Now, as you'll know, a very, very tiny amount of traders in the world ever become a hedge fund trader. It's even harder if you start off as a retail trader as opposed to starting off within a hedge fund or within an investment bank. If you start off as a retail trader, your chances of becoming a hedge fund trader are minuscule. So I'm really proud of the fact, actually, that I have a few students of mine who have gone on to become traders at hedge funds. Andy, who you'll see in the video that we're sharing, is one of them. So I am proud of that. And as I said, it's not something that I overly talk about, but I feel that Andy's journey is interesting. And a couple of points to make about that is, number one, you'll hear how it wasn't just a quick fix. He didn't just come and see me and then, oh yeah, I taught him a few levels or taught him a few things and suddenly he's great. It took a long time to incorporate what I taught. Something I've always said. The Norden method is a unique style. What I'm teaching is a unique style. It will take time to master. It took time for Andy to master it as well. And the idea. So that's the second point that I want to make here, is that the Norden method is not just about teaching you a style of trading. It really helps, I think, to teach you how to think like a professional trader, how to think about where to find edge, and the understanding that edge is small and we need to find some quite specific areas of potential edge in markets. And if you can understand that way of thinking as opposed to just understanding the method, you can then start to adapt it and incorporate it and find other ways. So Andy's taken what I taught him and applied it to different markets and in slightly different ways. And that's what my best students will go ahead and do. I think as much as anything with the Norden method, and when I teach people in generally with options or anything, I'm trying to teach them how to think like a more professional trader so that they themselves can then come up with some of their own ideas. So here's a link to share to Andy's story. I'm really proud of the fact of what he's done, as I am of all of my students that have gone on to work at hedge funds or investment bank, and likewise across the industry. So I hope you find it interesting, and please again feel free to comment if let me know what you think about the video.
Okay, so when you started
Absolutely.
trading, because you've had a lot of experience with professional environments, not just in retail environments, from what I understand. So when you first started, did you trade your own capital, or did you start off trying to get on with a trading house?
Starting first with my own capital, yeah. I do want to hit on the topic that you just brought up of the adults in the room, trading futures. By the way, this is also why I did like the content that you put out and the podcast that you have and the people that you bring on talking about futures trading. It's just, again, it's working in the cryptocurrency markets, you don't get anything like this. And the level of things that you hear about there, it's like, again, going backwards in time is what it feels like. But so I definitely appreciate that from the things that you have. Yeah. So as for my own trading, when I first got into trading and learning, practicing, I definitely didn't want to touch anyone's money to figure out how to do this on my own. So it was a few years of working on my own before anything, going forward. I did a lot of basically practice, review, the drills. The drills are really key too. That it just helps really, build the skill of reading an order book. And basically from there, I was doing this work in China. I had a few friends and kind of high net worth individual clients that were willing to then, oh, well, I can hand you, a few grand and everything. And from a few different people, that's nothing. And like, oh yeah, let's see how you get on with this. So that made it something where I could actually do this on my own and be trading for someone. So I have a little bit of a, pressure over me of, okay, I can't really like screw around at all. The years I spent just constantly, making recordings of my entire trade day and then reviewing those recordings after and doing that. I mean, I have like a list of over 1,000 videos, something like over 2,000 videos. Did that for years. But after doing that for a bit, trading with other people's capital, it was okay, but I wanted to do more of a professional thing, go into more of a professional space. And that's when I went and tried to do my first kind of prop trading. And the first prop that I had done was at a kind of an online kind of thing. So I would say it's almost similar to a funded trader kind of where you have to perform for a bit and then you get an account. And so I had done that. And I had noticed, which was really weird at the time, I had noticed some really weird orders going through. Like I'm there, I'm watching the order book, and the style of trading that I do is I'm trying to be extremely fast. I mean, ideally, I would be in and out of a trade within a single second period of time and under a second. And something like 5 seconds is a longer period of time for me. I don't even, ideally, those trades aren't going to be happening, but they do, here and there. But I go and I work for this prop for a bit, and I started noticing strange orders coming through. I'm filled on my order, but it's this many ticks away in the market. Like it's 6 ticks I'm trying to buy, but my fill is 6 ticks higher. What the hell is this?
Yeah.
And even though it only had happened a couple of times, and the first time I mention it, they're like, okay. And I record it, I show them the video. And when they get back to me like, no, that looks like the right film. Like I had to like go back and then play it at like a tiny percentage of the speed so that it would really, really slow down. And I'm like, look at where I'm clicking. Look at where the fill is. Obviously not. This is off. And then when it happened again the second time, I go online, I look the place up, and I don't know if you know about this. Probably shouldn't mention some of it. I won't mention the company's name because what I found from here was like kind of strange. But what was it? Futures.io, the forum there.
Yeah.
I'm sure probably your older listeners. I don't know if that's still a big thing, but maybe the older.
I think they've rebranded it, but the online forum, Futures.io, right?
Yeah. So
Yeah.
I go in there and I see that other people had also had issues with this place and had a lot of complaints and would quickly get stomped on and get lawsuit, threats for lawsuits and this and that. So I was like, okay, this is really sketchy and pretty shitty. And I can't be seriously working my ass off with this this company, with this place, and then be worried about this kind of weird stuff going on, and then waiting on payments for 2-month periods, which were, I guess, common from there. So then I looked into doing a different prop, basically working for a different prop firm. And I found one out here in Korea, which was based in Seoul, which is Seoul was where I was living at that time, was there for 10 years. Um, and so I went and started working there, which was, I think that's a whole nother story because that's kind of where the whole crypto part of it starts off, actually. But yeah, in the meantime, I was still kind of trading for clients, but then it had become just very, seldom that I would be able to trade maybe one day out of the week or something. And so the returns really weren't coming in. They weren't too worried about it. It was almost more of a side interest for them, like, things going well. So they wouldn't really check in too often, but it's more, it's not something where I had to do reporting every month, which is something like we do with the fund now. But
Yeah, very good. Okay, very interesting. Now, how did you come into contact with Gary Norden, friend of the channel?
yeah, great guy. So, oh my gosh, this is way back when before he really did anything like online and put any kind of content out online. All he had was he had just come out with his second book, and so
The End of the Bull?
yeah, The End of the Bull, which is a great read. A lot of people harp on the negativity in there, but if you're in the futures industry, well, even though it's not a great deal just directly about futures, it's just about trading in general. Yeah, it's definitely something helps you with that develop that contrarian mindset in some ways. But he had very little out there online about him, very, very little. But from all the things that I had seen from different speakers, educators, this or that, his little bit of content that was available online just sounded that much more professional and sounded like, okay, this is something where, obviously this person had worked as the head trader at these large banks, had worked on the floor, must have some sort of real knowledge that plenty of these other educators and that don't have. And I didn't feel that he was an educator at all at that time. So the one thing that I did know about was that he would take people on for a while, like take them on as a client. And he never would say student really, but just as a client. It's almost feels more like small apprenticeship in a way. But I kind of applied to that. Like I contacted him like, oh, I'd really like to learn more from you. This is really interesting. I remember he had me on for a call at one time. And this is back when he would mention that he would do 2, 3, 5, 10, about 5, actually. I remember him saying constantly like about 5 people per year, even though he'd get hundreds of emails. So I had contacted him. We did a call and he said, yeah, I'll think about it. Like, gosh, this guy, at first I thought maybe is that like some sort of marketing ploy? Like, the guy just, maybe I might take you kind of a thing. And then, it gets you to really want it. So then whatever cost it may be, like, I'll just take anything at this point. No, it was very true. And in fact, I basically got a no from him. And so a couple months go by and was like, you know what? I really want to know what's going on here. Like if there's something else to learn or take from this, regardless of whether I use it or not. But there's so many questions I have about market order flow, this and that. Just it would be great to be able to ask directly, and not just for what he's going to show me, but just that I can answer these questions in my own head. I've got to know. So I had written him a longer email and like stated the reasons, like bullet pointed out, this is why you should take me on. This is why, and this is why, and this is why. And I sent him that over and he's like, oh yeah, hey, I thought you were going to get back to me. Yeah, I considered you, but yeah, I didn't think so. But it was one thing that actually did stand out. I was like, okay, I haven't started 2 of my own businesses before and made those work well. I thought that was a point of interest that would say, hey, I'm a hard worker. No, he didn't care about that. I didn't move over to another country and learn this language that is well known as being one of the harder languages to learn and learn it to a very proficient level. That doesn't matter either. It was being young, growing up, and skateboarding and being into skating. And I kind of would say that was my very first job ever, having a small sponsorship from the age of 16, it was right about 15, 16. And that actually piqued his interest. And says, you know what, I'll take you on for that. Because sports background.
Yeah. It's huge in this business.
So yeah, then I got to work with him for a couple of years back when he was doing that kind of a thing. And it was just amazing, you know, being able to I'd always record my own videos and go review my own trading and everything, and being able to have someone else you know, look into that and then give you, you know, feedback right away and see how things were. And one thing that I would note is, on my own, before even working with him, I was profitable. I was trading profitably, but I felt it was absolutely inconsistent. Later on, I could see, like, yeah, it was inconsistent. You develop over time anyway, but at that time, I was trading profitably. I was trading already pretty much the same way that I still somewhat trade now, and that I did working with him. But right after going through this training and stuff, and I remember for a good period of time, he doesn't allow you to trade at all. You just have to learn. Don't even touch the markets. Don't even open an order book at all. You just start creating your own ideas as the training's going. So you take the period of time off. When I got back into it, I remember my first month was just abysmal results. Absolutely, like, terrible. And then I look at the next month and it's a little bit better. And the next month and it's a little bit better. It was like a slow curve up. But definitely I would say, like, even after doing that, I remember it was clearly a good 2 years to where I was like really solid. But yeah, I would say even for myself, it took me a while to get to a good level. Not just, you know, scraping by, and not just, you know, is today going to be a good day? Is today going to be an average day? But to a point where, you know, you can look at what conditions are and say, if they're absolutely terrible, I'm not trading. If they're even somewhat bad, maybe I can get a couple of trades in here and there. If they're decent, like, okay, I can really make something of this. And if they're great, like, oh, this is Christmas. This is Christmas today. It was come early. So
very interesting. Are you still, like, are you close with Gary, or do you talk to him ever still?
Yeah, definitely. And he actually talks with our fund a great deal. He's good friends with Jesse, our pal over at the fund, one of the other founders. And we all keep in good contact with him. We've done several calls together to go over, you know, different strategies, this and that. And he's also been working with us somewhat. We're kind of working something out where we can kind of join both of our funds together, because at times there can be a massive interest for the cryptocurrency environment and funds in that area. And because we also run a market neutral fund and a trend following fund, which is something that he doesn't have much interest in, but he has his own market neutral fund. We have ours, and there's a type of thing called a fund of funds in the industry, where a fund then goes out and actually allocates money to other funds. So there are funds of funds out there that they don't do any trading whatsoever on their own, and they do the due diligence on several other funds and diversify across, you know, many different options. And then you get a nice, safer, somewhat return from having different funds and allocations across those funds being diversified, basically. So it is really helpful. We actually are in contact with several of those for funding our own business. So it's funny how the industry works, but there's always, in a way, derivatives of derivatives. So
okay, very interesting. All right, so let me just get the timeline, because I actually have quite a few questions.
Okay.
You started trading, and then you moved into kind of some online prop type firms, and then you eventually landed into an actual in-person firm in Seoul.
Yeah.
And that was
So
trading futures.
so here's the funny thing. So I had a background, I had a track record, I could prove everything, I could show them everything, and I come in and I'm like, okay, here's what I have. You guys are probably hiring me, right? Because and this was the funny thing. So going in there, and by the way, which was strange, it was an Australian prop firm, but all the traders were Korean. There was zero English in there. Since it was based in Seoul and it was their sole entity, it was all only Korean. And when I go in there, this prop firm, even in Australia, the first thing they say is, we don't give a shit about your background, your results, anything like that at all. We have a rule here. Everyone who starts off in cryptos. What? Like, okay, these are my markets. This is what I trade. I'm not interested in some cryptocurrency stuff, whatever that is. I've always stayed away from it. And in a way too, it's always been the thing that's like somewhat looked down on in
Sure.
in the trading industry. Yeah, we know it. And it has this, really negative connotation. I think it really has gotten better over the years, especially after the nice little COVID bump and everybody got back into it. But after the first dump, 2018, 2019, everyone was just, harping on it. And it was the big joke on FinTwit, right? But I go there and they're like, everyone starts off in crypto, which was very interesting. The big thing about that was you get to start off an actual trade capital. So you're not trading a sim, you're not doing just practice trading in any way, because you can start off with such a small account and you can work such tiny order sizes that it really doesn't hurt at all. But the thing that they had said at the firm was, we have everyone start out in cryptocurrency because that is the fastest way to profitability that we see for anyone new coming in. So I ask them more about it. They basically say, it's the easiest market. That's where you start. Okay. So it's easy. So you start there. Again, that's what they say. Is it easy? If you look at it in certain ways, kind of could be. But then again, no markets are really that easy. And so many things are very efficient, and you still have to make your own, make your edge out of what you can trade. And I think some of the dynamics of how the industry works, and maybe what we'll get into there, are not well known actually from the outside world, from maybe traders that trade futures, coming into this. There's many different things that you'll find out that, like, okay, this is really, really different. Because as you know, there are future contracts in cryptocurrency, obviously, and they are very different from traditional futures. Very, very different. I was just going to say, working at the prop firm that they had going there, them saying, okay, it's much easier in crypto, so get started in this. I feel like it was easy for a lot of people coming into trading, which they mostly hired directly out of college and people that had never traded before. Yeah. And they didn't even have much of an interest in me because, oh, yeah, you're making money on your own. Cool, great. But we have these other traders that we bring in directly off the street and they make tons of money. And so inside their firm, there was only two guys that even traded outside of crypto then. And they had been, long-term traders, and they were kind of the head managers, whatever, at the time. And they only even traded futures on the side. They also did trade cryptos, right? So, like, for example, one trader who had been working there 3 months, then started getting profitable. And before the year was already over, he had made over $2.5 million. And on a very small account. So they don't care about a trader that comes in that can trade futures consistently and produce a profit. Why do we give a shit about that? You're going to make us how much money in a year? This guy over here, Joe Kwan, who just turned a $50,000 account into 2.5 million, in the last 6 months. So who are you?
Yeah.
And that was only one of two guys, and that was only at their office. And then they had people that worked from home that were they're prop traders, but they can work online, and they were doing similar. And even I remember this on Binance, they were in the top 10 performers of like P&L on a daily basis of having the best performance. And it would be several of their traders in there. And these guys, again, no experience. And another funny thing, when you came in there, there was no training whatsoever. It was, here's what it is, get started. That's it. But that's another thing about crypto, of why, there's been a lot of people that have come around and have made great money in a very short period of time, but especially on these massive up runs, right? And so, I remember like looking at their P&L because they wouldn't let me see it on my end. And so I literally have to like look on Binance and search these guys on the Binance website and see what their P&L was for the day. And I would see massive swings of, say, well over 100 grand in a day. Who cares at the end of the month when they produced, another 30%, 40%. So it was easy in that regard, of where someone with nothing could come in and really make something out of it that way. But the way that I was trading and the things that I was interested in were very different. And trading for big, long swings and large moves and holding leveraged positions overnight, never had an interest in that. And I come in and I'm like, I'm into spreads. Can I do some of those? Like, what are you going to make on that? Well, definitely not $1 million, off a 50K account. But, have you heard of consistently profitable? You guys out of here with that. So I was working there for a bit, and the thing that actually got me, and the main reason of why I really left, was that their setup there was something where, and I think there's a ton of prop firms out there, and the main reason why I stopped even trying for prop jobs, they will charge the trader on your trades the full cost of what the trade may be. So for the fees from the exchange, so say like Binance will typically charge a 0.1% fee on entry and exit. And on their side, if you're using limit orders, since they are in the highest tier rate of the highest volume, because they're a massive prop, and they, by the way, they only let you trade on Binance there at the time, they would get rebates on that. So on their end, they're getting rebates. On your end, you're paying 0.1%. And when you're doing trades and trading a few $1 million in volume a day, how much money are they making, and how much are you getting clipped on the costs for your trade? So I'm looking at it that way, and the type of trades that I do and that really interest me, being something like spreads, it's those little fees that could just eat you alive, make and break you. And a great deal of trading out there, I think a lot of things in the crypto industry have really gone that way, where you're really just clipping out really tiny, small wins along the way. And you're just making little tiny profits, just getting little bits here and there, and it just adds up over time. Even at the fund, one of our main bots that we're consistently working on is kind of a HFT bot. And there's another correlation kind of a trade that we do. And it, something like even like last weekend, in a single market, we had over 50,000 trades. But then again, if you're paying something like 0.1% on your entry and exit every time, it's insane. Just to give you a little idea of what that amount is, there's there's the ES contract, the classic. And what you pay for that on a round turn, very generally, like if you're coming in from retail and you get a decent rate, you're paying $3 to $4, right?
Sure.
And I think my last recollection, if you get some kind of a fee knocked down from the exchange and you're doing it professionally, I think you can get in a full round turn for $1.60, even something around that.
Okay.
And that's, again, you know, you're either working professionally with a firm that gets you that, or have some sort of membership agreement. I can't remember what the exact members rates are right now. Anyway, it's been a while. It's been a while to touch those markets. But if you're paying 0.1% on entry and exit, and that means your round turn is 0.02 or 0.2%, then that would, if the S&P right now is, say, at, you know, 4,200, if it is, and being $50 a point for a single contract, and that means your round turn fee would end up being $420.
Good Lord.
And that's the average of what you're paying in crypto to trade. So
Wow.
imagine every single trade that you do with a one lot in the ES, your round turn fee is $420. How are you going to make money from here?
Yeah, it's impossible.
It would be literally impossible. Yet that's the average in crypto. So there's different ways to work down your fees. I mean, you really have to look around for where you can get good rates. You have to either make agreements to be a market maker, which we have on a few of exchanges. And then there's some exchanges where you just have to pay up. You just have to directly pay up and say, all right, the spread is so good. The trade going on here is so good. It's actually worth it. I mean, there's some ridiculous exchanges directly out of Australia that charge you a 1% entry and exit fee. I mean, imagine what you're clipping there.
Yeah.
It's insane. It really gets insane. So you have to really work these things out, and it's just a constant game of math. Like, am I gonna really make money off of this or not? For how my entry price is at, where my entry price is at, to where I'd be exiting on this trade, and what I'm going to end up paying. Is this going to be, you know, is this going to work out to being profitable for me? So anyway, I was working at this firm. They were charging way too much, and I said, you know what? If I just go off on my own, and I still have, you know, money with clients, I have my own money. Like, I'll just do this anyway. Why take a, you know, just taking 60% of what I make here? I could make 100% of that, and you know, you don't need that much money again, too, to work in cryptos in a way. And it kind of worked out there, and I did it on my own for a while. I think the bigger thing was got involved in a Discord where there's a lot of professional guys, of all things. It wasn't just, you know. And at first I thought, oh, these dudes are lying. They're so full of it. There's no one in here knowing what they're talking about. But I was lucky enough to find a Discord run by someone that was a ex Goldman Sachs trader, and yeah, a lot of great guys in that. And from that, I got linked up with Jesse, who I've mentioned before, and he had co-founded an exchange out of Australia that mostly serviced Japanese clients, and it was an options exchange. So he had gone through all the steps to get an exchange going, all the regulatory stuff I have to do there. And a little bit before that, I'd gotten hit up personally by one of the kind of algorithmic coders on there, like, hey man, what you're talking about and how you do this and that kind of entry, and you know, there's a lot of stuff I wouldn't tell, but like, hey, you want to work together? And so we started chatting a little bit more, and working on stuff. And now at this point, we've ended up made our little team and started our own fund. That algorithmic trader turned out to be a VP for Morgan Stanley, who had worked there for 11 years and was their head of algorithmic coding. I don't know. You can look him up on LinkedIn or whatever. So his little icon for his Discord, you know, typical NFT background, and you just think it's some 14-year-old like, hey man, tell me your trade secrets, dude. All right. But yeah, it turned out to be a really cool guy. I mean, these guys are definitely superstars in what they do, and it's been an absolute pleasure working with them. So
this is one of the craziest things I've ever heard in my life, and I feel like every time you talk, I just have so many questions about it. So I actually want to back up just a little bit if I can.
Okay.
And,
Okay.
because I actually want to push forward, but I keep wanting to go back as well. When
Yeah.
you kind of paint me a little bit of a picture here, when it was when you were working at the firm, you were in person there. What did it look like? Did you have like a little desk with other desks around you? Did you have like your own office, or what did it actually look like on your first day when you were working?
I'm trying to think. It ended up being a smaller room than you would think.
Yeah. Okay.
But it's Asia, so it's not.
Okay.
They typically have everything is very, very miniature in some ways, but it was something where the better traders got more of a desk space.
Okay.
They got to,
Yeah.
they got to have more space as well, and they got to have a few more screens.
Okay.
The newer traders, I remember this, we could bring in our own laptops or something, but we had our screen. That's it. We had one, which actually I'm completely fine with. I started off working on my own, just single screen. I still prefer that to this day. I don't go massive screens. In fact, I say a huge part of my edge is in my own setup on how I set my own screen. And it's super stupid simple, but I never share them actually online. And so a couple of guys that I have shown it to have just gone, oh shit, wow, this is so much better. And I'm actually trading so much faster just because of this setup this way. And I refer to it like this, like literally you're trying to buy and sell and you're like crossing a lake to do it. There's other ways to do it where, and the information that you're looking at, and especially when you're doing spreads is the thing. You just have to have it set up in a certain way. But again, that's my own little preferences over time.
Yeah.
So working there, it's a small place. In fact, on a second floor of a very just innocuous building where you just wouldn't notice it from the street whatsoever. And that space could be used for typically a restaurant out here. And they just gutted it and put in a little trading room. And there wasn't that many traders inside. They did have a lot working online. I even only went in and worked there a little bit and had the option of like working at home and like, yeah, screw it, I'll work at home. It's an all Korean environment with a bunch of kids that are out of college, and I definitely am not fitting in here, which by the way, I had worked at HMC, which is Hyundai Tuja, which is what they called it at the time, but that was Hyundai Investments. So I had worked for this investment company before, but not as a trader at all. But I actually found it really interesting to talk with the people that were trading. And at that time, I knew almost nothing about trading, so I didn't know at what level they were really trading at. But I got to talk with them about trading. And the whole industry in Korea with stocks, futures, this and that, it's so different. And I think the most notable thing is this, where they don't have futures open to the normal public. Like you have to have a license, you have to be of a professional level to even be able to touch any kind of futures contracts.
Wow.
You also cannot sell. Selling is illegal in Korea. So the sales side. And it's the exact same for cryptocurrency out here. So if you've ever heard of that kimchi premium that keeps coming up, especially when things get going, that is a great deal in part because you're not even able to sell. Well, you can only sell if you buy. And if there's no people on the sell side, really, unless they're really willing to give up what they've already bought, obviously it could create, just some really crazy inefficiencies, which we've seen, right? I mean, blasting up to a 60% premium at times.
Okay. So when you were doing this firm, they didn't give you any kind of a strategy or anything. And it's wild to me that you didn't have some kind of institutional tools or something. I mean, you're just off of Binance firing in orders.
Yeah. That was pretty pathetic. Now, as for institutional tools, they had Jigsaw TT going for, I think you could even have like Sierra charts and Ninja Trader if you wanted, if you were trading futures, which you weren't allowed to, and which absolutely no one did except for those two guys. So that was something to work towards if you had stayed there probably, I don't know how long it would have taken, it's just everyone just stayed to the crypto. And so you're just working off the Binance platform. Obviously I quickly got Bookmap set up because that was the only thing you could do. But then I did that on my own as well and had to look into that. No one really cared for that. I do think others did set up some other kind of system of their own. It was kind of just as a preference. But again, that goes more under, no, they didn't give you any kind of a setup. They didn't give you any kind of any kind of training whatsoever. Just here's $100 account, don't blow it. And if you do, maybe we'll give you another shot. But there was really just no background to it. Just a quick interview. Then, okay, we'll see how you go with this small amount of money.
So what were you trading? Just like random altcoins that you were hoping to pop off, or?
You could do anything you wanted there. So at first I started with Bitcoin. Quite a good deal of trade in Bitcoin. And I remember I went through, I did the typical thing that I did back in trading futures when I first started with futures, which I think was definitely absolutely a benefit to me at the time. And I think other traders have probably, that have probably gone through this. You look at one contract, you're not doing too well here. You go to another one, you try another one. I've really worked across the entire spectrum of all futures contracts. I mean, from the Japanese Nikkei trading off the Japanese exchange to trading off the Singapore exchange to obviously ES, crude, NQ, trading different calendar months of that, trading bunds off the Eurex, then off ICE, futures, the gilts out of the UK. The list absolutely goes on, but I do have my favorites though. I mean, my real go-tos, and where I really learned to become profitable, where I was doing good. I mean, the first profitable contract I could trade, yet it was not profitable not too profitable because of the dang fees, was crude oil. Then after that, it was the ES. Again, there could be, a lot of scratching going on in there, but it was the DAX, trading the DAX. And that was back when the DAX was good and the DAX was trading half point, 50-cent ticks. Now I'm so in crypto now, all I can think of is it's 50 cents, it's 50.2, whatever. But
Sure.
It was in halves. So it was 12.50 euro a tick at that time. Once they changed it to 25 euro a tick, it changed up that market. A lot less decent flow going in, a lot more pausing, a lot of the bid offer back to back, not having a nice little gap in between the spread. But that was definitely my go-to market for such a long time. So I would spend a good time in that. A bit of ES, some NQ. I also really liked the spread between heating oil and RBOB.
Okay.
RB and HO. That's a great spread there. And a lot of my trading in crypto is basically similar to what I was doing out there in NYMEX. But spreads are definitely key. Spreads are absolutely key. Just so many things that you can do with them inside the crypto markets that you can't do in so many other places. There's so many different variations because of different exchanges. There's futures, there's spot, there's stat arbitrage between different, coins and tokens, whatever. But I'll let you get on with, I probably have created a handful of more questions from the one.
I think we're just gonna have to push on here because I'll guess. So looking at 4 hours. Okay, so you started trading, you left the secure world of futures and started chasing magic internet money. And then from here, you decided to go off on your own, kind of leave this firm, but you still stayed with the crypto side of things. And then this was the beginning of that path into the fund that you work for now to date.
Yeah.
Is that right? Okay.
Absolutely,
so the fund that you're working for now, you are the head trader. And are you did you have to completely rethink everything, and is it all algorithmic, or are you were you able to take what you learned from Gary and what you do with shorter time frame stuff? Did that translate over somehow, or did you have to completely like rethink everything?
Oh, well, the first thing is it absolutely did translate over in
Wow.
many ways, in so many ways. Now, I think one of the biggest things is Gary's style, and what Gary does is a lot more of, as he's explained it before, scalping, and
Sure.
which is one thing, by the way, I actually hate in this industry. Way too many people use the term scalping.
Yeah.
Um, I don't think Gary uses it incorrectly whatsoever. Gary is right about it. It is a real form of a type of scalping, but scalping coming from the trade floor, where they were literally going for scalping off from the bid to the offer a tick, a literal tick, and if that didn't work, then scratching out, trying to at least. So scalping that way and just being very fast, getting what orders you can. Now, in crypto, that's a whole different thing, where if you take a look at something like Bitcoin's the general example here, most exchanges will trade it, and they'll have every one tick is a single penny. But that obviously that market moves $1,000 up and down a day. Very easily it can do that. It definitely moves, 100, couple hundred an hour. So if that one penny is per tick, the bid and the offer can be very far apart. It can be completely, back to back due to algorithms that are running in the market, but just blow, $20 up, $15 down, $35 up, just constantly doing this stuff. So you're definitely not scalping for a tick there whatsoever in any way. But those general principles work in so many ways. And again, a lot of what I'm doing is not just one side in, one side out, scalping for small profits here and there, but it's actually working into out of spreads or working cross exchange arbitrage. But the general idea there is you're doing one thing in one contract, you're doing a different thing in another contract, and how to do those two things. And then from there, it can be very different. Like the size that you trade in one may be completely different from something else, where it may be a much thicker market, a much slower market. So you're working possibly much larger sizes, and then you're, fading your order across several different prices in the other markets. So things can get really tricky, but a lot of strategy has been developed from that side and having that experience. I mean, it's the experience that, goes back such a ways, and even to the heating oil RBOB days that really helped.
Back when life was simple.
Yeah. Just look at these markets in a different way. Yeah.
So could you kind of paint me a picture of like what is a day in the life of the head trader at a crypto fund? When you get up in the morning, are you really focused on routine to like keep your performance and your mind sharp, or are you mostly like overseeing stuff? What is it like? What do you do when you wake up and go to the office, work from home? What's it like?
So general day is, get out of bed, try to shake the hangover first off. I'm teasing. Definitely, keeping in a routine, which is really how I lost the weight in general from all those years ago, and I basically kept that up. A very small, quick routine. I've noticed that, if it's something that's really drawn out over time, there's those days where today I got to get to the airport. It's time to go. There's no screwing around. So things have to be, quick. But get up absolutely first thing, get a drink of water. That helps refresh the mind. And if you notice, if you wake up and you drink specifically like just some water right away, then your brain wakes up a little bit more. Try to drink and then go back to sleep. And it's actually a bit harder, like those times when your alarm goes off, you just, I'm just going to cruise and just sleep for 5 more minutes, whatever. Drink some water first, then try to do that. And you're like, it's just a little bit more of a mind waking up kind of sensation, especially some nice cold water. That's what I prefer. I heard that many, many years ago, but it's, stayed true over time. So get some water. I might have a couple of vitamins, depending on if I'm eating that morning. And eating for me is I do that typical, which has gotten so popular now, the intermittent fasting. That's what they call it. Back in the day before they had all that, it was just, I'm not eating till dinner time. That's all
Yeah,
you'd
yeah.
say. But might have just a small bit of fruit, and then open the window, take a look at the sun coming through, kind of wake up a bit more and get to my exercise. And now that might, be less than a 5-minute period. And then working out, I have it down to a real quick routine where, I get, 5 minutes in. And so even if it's a gym day, that's what I call my pre-workout. Other people pop these high caffeinated sugar drinks. I'm like, I have friends message me once in a while, like, oh, what are you up to? Oh, hitting my pre-workout, but it's in my home workout before I actually go to the gym and do a workout. So most days out of the week, I do go to the gym. You have to have the rest days anyway. So I'll do that. And I really try to keep any like looking at my phone, anything like that, checking messages completely away from me until I'm on the bikes at the gym. Now I have certain notifications on my phone to where, if something's happening with the fund on that side, bam, it'll wake you up.
Through.
But those are those emergency things that are set in place. Other than that, I'm not going to check anything till I've gone through the workout, then I'm on the little exercise bike, and then I can take out the phone and kind of indulge and maybe do a little scroll through Twitter for a couple of minutes, check emails, do different things. And then you have to get the coffee going. There we go. Each day. And usually from there, get the coffee and then kind of take a look at what I want to be doing in the market today. And the market from there really looks like this. I have the positions that we're in, which a lot of these may be spreads that we're holding, something like a basis trade, which is one of the key trades that we have for the market neutral fund. And then I look into certain order books, how they're trading, and where we're running our algos on. I watch those trade out for a little bit. I do my own personal trading on those to where, and again, like even that at this point now is more just testing phases, and that testing every single day. Even though I know how things trade, I mean, if you're a trader, you just like doing this anyway. So even I'll have a session of it, even if it's just 15 minutes for a day, at least it's, a little bit more touching the market, feeling things out, getting orders filled. And what's really key is going through our data of how the bots have performed, then seeing, okay, what things can we work on from here? Should we be working more on exits? Should we be working more on entries? Here's the list of trade ideas that we wanted to be developing that we've talked about, for months. Then there's trades that I'm starting to see in order books that, oh, this might be a trade here. And so something like that, I'll trade out at least a couple of months on my own. That'll end up being anywhere from a few hundred trades, a few thousand trades, maybe more than 10,000 trades. And by the way, yeah, I could easily do like 1,000 to 2,000 trades in a day. So that's just by hand. I think one of the other key things is our speed. So us, even though we're not co-located to the exchanges, our dev, our quant, basically our algo guy, our go-to guy, he is just such a superstar that he's gotten our speed down to where we're in competition with other people that are friends with the exchanges. I mean, our latency is just unbelievable. And if some of your viewers who do algo trading, I think in the futures space, they'll hear this and they'll laugh, but bear with me. Crypto is quite a bit different because it's all like cloud-based server stuff, but our speed is basically in and out on a trade. We can be 0.06 seconds for an exchange, which is a nightmare for traditional futures. Okay.
Sure.
But for the crypto industry, that's amazing. That's amazing.
Wow.
Like large hedge funds are happy to have that kind of latency. And we recently just did a a pitch, a VC pitch. A lot of people were there from different industry sides of the industry and some exchange stuff. And we got hit up by a large firm that wanted to take us all in-house. And a big part of that is the fact that we've gotten our latency better than so many others. The other factor also being that we're fully systematic. So the strategies in the fund runs off of these bots. On this side, I develop all the trades for the market neutral side. And I think that comes, it really comes from having this background in futures, trading futures, having to be really quick with it. And these futures contracts really matter. I mean, a 6-tick move, even in the ES, when, you're thinking about, oh gosh, I got to pay rent next month. It's a lot of money to you, it really, it can stand out. So you have to be, disciplined, absolutely disciplined. It's really trial by fire, really learning, what's the term that I'm thinking of? Whatever, I can't remember. But it's definitely, it's a hard game. It's a hard game. It's not like any other kind of thing where, if you're in stocks and you're not leveraged in any way and something goes against you, well, we'll see where it's at tomorrow. There's definitely in this realm. Yeah.
Did you ever buy Dogecoin?
Oh, did I buy? I thought we wouldn't bring that up today. I thought we wouldn't.
Oh, is that on your list of topics not to talk about? I'm so sorry.
No, I have a wonderful Dogecoin story that if I can remember it 100%, because this is way back when it was like really cheap. And my friend always tells it to me. He's a close friend of mine, lives out in Seoul. He was actually interested in cryptocurrencies way before I ever was. And it was back in the day of like, dude, just trade futures. That stuff is so silly, so stupid. And so I've kind of turned over to this dark side. And I'm now when I go and visit him, he'll talk all about them. Like, oh yeah. And I can listen along now and things make sense. But he had bought Dogecoin when it was well under a single penny. And I remember it was something like over a couple month period of time, his trade, it wasn't a big trade, but it went down. It was like, he was down $8,000 and he's like, damn it. Oh, he finally cuts the trade. And then right after that, it spikes up and he's like, that same thing, like just a few days later would have been worth $85,000. Oh my God, what did I do? And then he's like, well, it's too late to get in it now. And then from there, and that 85,000, I think that was about like the 8-cent area. And then it goes up to 69 cents. And then he's like, I really screwed up here, 60-ish cents. Kicking himself for that. But then again, it's like, so many people in this industry, and especially what you see online, is they look at the things that have just blasted up and say, oh, if only I did this. And it's just, that's not a thing that you can do. So for me, for my own trading and my own personal trades, I have had to hold certain things like there's the FTX, right? I had to hold FTT token so that you could get discounts on the exchange. But personally, like there's been very, very, very few tokens or NFT kind of things that I've ever purchased, all being cool with them just going to zero, because in the end, like, I mean, that's what we believe at our fund. We're ultra paranoid and we believe everything is going to zero. We believe that all the exchanges are actually going to go bust. And I think that puts us ahead above everyone else because our safety is just like no other. We really harp on safety. And the whole thing with the FTX, when that blew up, we ended up coming out of that fairly unscathed. A lot of that due to just all liquidity drops, spread blowout. People are not really willing to trade. Something where we had a short position on and it had gone from about 10 cents down to 4 cents. So we're like, great, okay. And this is in the directional fund, our long short fund that we have. It's not the market neutral. Okay, great. We have to, get out of this trade. And now it's at 4, but that's where the bid's at. And then the offer starts getting just peeled off and peeled off. People are not willing to sell. They just want to get their money off the exchange. And now the offer goes up to 14 cents. So you got a bid at 4 and an offer at 14. And we've got to get out a nice clip size out of that. I'm happy to say that that trade only cost us few 10 grand-ish, so 20-ish. Can't remember exactly what that worked out to be, but even just that one hit was just like thankful. Okay, that's not that big in comparison to how things turned out. The other thing that we were also happy to see play out was we have our business go through Australia, which I don't think many people even know about this. It's not talked about online whatsoever, but Australia and Japan got all of their money back from FTX already. Everything that was all there through those countries got it all back. And that's because of their regulation, their system that they have there. We were always told like, oh, everything's safe there. We didn't really believe that anyway, but still like, okay, that's nice to hear. And it actually played out that way. So our business runs with an AFSL, and that's a license through the country where we can really be secure with trading on an exchange. And still, we don't even really leave the money on the exchange. We go through a custodian. So that's a third party. And people that had money through a custodian also didn't get hurt in this FTX thing. And having insurance beyond that is like the next step, as well as splitting funds across several exchanges. But yeah, the AFSL sort of thing just paid out for everyone, and people got their money back from Australia and from Japan. And I think Japan was the first, and it was really quick. It was just a quick turnaround. I'm like, here you guys go. And the way that works is, even though FTX was taking everyone's money and then pumping it into all these shit coins out there, because of those laws, they were not able to take it out of the bank. They may have these other banks, but if it's customer funds and it's from this country, it's stuck here and you can't do anything with it. And when they want to take it out, they can take it out. So those funds had to remain that way. And they did. And SBF wasn't able to pull his little trickery. And I think maybe my hair comes off looking a little frizzy today, a little bit like him. So don't get the wrong idea. So yeah, things really did work out, and definitely happy to see that. So
okay, because when you were in your fund, a lot of crazy stuff has happened in crypto. Was FTX like the craziest thing to happen? Or actually, even say like this: when FTX or Luna or something like this happens, is there, like, before it ever goes mainstream, are you aware that this is going on, or is it also just like out of the blue stuff that catches you off guard too?
So I think there's really two honest answers to that. Before mainstream, way before mainstream. I mean, I'm seeing it on Twitter days late.
Okay.
I mean, like, it is late. When it's really hitting the news and it's really becoming a thing, it is late. Second to that, it is out of the blue. And I feel like I'm the last person to know, because inside of the deep crypto industry, everyone's knowing, everyone's, on top of this. The news is out, and it's talked about. Wow. So if you're following some of the right people, and it's not quick on Twitter, it's more like in things like Discord, and it's things like some of the Telegram stuff. But for your listeners, please be careful, especially Telegram. So many scams out there. Discord as well. I mean, who knows? Yeah. I probably, my face will now pop up with a fake Twitter account, a fake Discord and stuff, asking for money or something. Don't trust it. But yeah, hearing about these things happen and then seeing them play out, it is in real time. It's pretty wild. But as for specifically the FTX, so many things had happened in the last year. By the time FTX happened, I mean, the feeling was basically just like, all right, another one. Like, it was just a joke at that point. Just an absolute joke. And the whole industry, like, what the hell are you going to do here? And from that too, it just made me really rethink, like, okay, there's certain trades that we do, that I do, that I kind of want to like ease up on. Something where, you might be in a spread and then also be lending out a little bit here. But if there's any kind of lockup, absolutely no way. And I don't think I've even gone to any lending in any way whatsoever. You can like lend directly on exchange. I'm not talking about Celsius or BlockFi, but you can lend directly on exchanges. Then the borrow rates are down a bit for people who do the borrowing, but that's why also borrow rates have significantly bumped up, because no one's really willing to lend out their Dogecoin or this or that. Not as much, definitely. But going back even a little bit farther to where the thing really started off from, I would say it was a big, huge kick when the whole Luna thing happened, and that ended up being just. It was the best of times. It was the worst of times. It was a great experience. I look at it now and just very fondly, like it was a lot of fun. It was a lot of fun. I was actually trading oil the day it went negative. It was like 2 a.m. here for me, but I was seeing like how things were going, and so I was able to trade it live. That was fun, and I mean that was a great time. I look back at some of these times, it's like, oh, this was cool. Trading futures when the Corona really just popped off, and before the DAX ever became the 25 a tick. That was also really good, but specifically, yeah, the Luna one was great. The one thing was we did have a good clip size of UST at the time, but that's because you try to diversify across all silly stable coins in case of, and I mean we've also recently seen USDC have some FUD in the market, and that was not at all the same level, but it was a nice little like remembrance of, when these stable coins, when they break, it's actually good times. There's so much good trade to be had in those. So that was actually a good month for us as well because of the USDC thing. But yeah, going back to USDT and the Luna situation, when that popped off, it was just unbelievable. I had always been super skeptical of the whole system, and obviously because the math for it just looks so off. I mean, if you're able to just, the only thing keeping it in place is the fact that people redeeming and getting back and getting paid back, and it's like, okay, so this algorithm is doing that, and what if just one part of it screws up for just a short period of time? Okay, well, they'll get it back online. But is it going to be enough? And as we saw, they just print more and print more and print more. And I think the bigger thing was the steady lads deploying some more capital, the classic tweet. And realistically, was he putting more money into it? Possibly. But then again, I think now even after he's come out in the news and said, this is Do Kwon, by the way, he's come out in the news and said, I'm down infinite. I don't got any money. Mr. Braggadocious on Twitter for so long now. Don't look at me for money. And they catch him, arrest him, and they find him on his person or up his rear end a USB stick with tons of capital on it in cryptocurrency that he's funding his lifestyle with at this point. So I mean, when S hits the fan, as they say, these people that are holding so much money, what are they really going to do? Like, oh, let me hurry and give everything back. That's great. That's wonderful if they do that. That's, very honorable and honest of them if they do. But we've got to come at it like they're not going to. I can't trust someone else I absolutely don't even know, let alone them, their team, and whatever else is going on in the background to hold things together. So we got out of our position there. We actually took a decent sized hit on that, but because the market was trading out so wild, and because we were able to, and again, even it was a stable coin and it's going down. So what, you short it and let it go to zero? No, we only traded spreads during that time, and still spreads paid out so well that we did really well that month, really well, and some good returns. So that was definitely some exciting times. The next one after that was Celsius, when that went bust, and like again, similar situation, similar wild times out there. So last year was fun in many ways, massively stressful. Definitely not as easy as a nice run up in the market, but it was not only exciting but great. We had a good year. I really wish I could talk actual returns. That would be fun. But for regulation reasons, I know that we're only able to talk returns to wholesale investors. So if anyone out there is a wholesale investor and wants to talk to us, please send Jesse a message. Other than that, the things that I can say is we were one of only 41 audited funds that made a return last year out of well over 400,
Wow.
over 400 in the industry. So it was over 90% lost money. Well, I think something like well over 50% went bust, just completely went under. And what's that created? Well, what that has created in this new kind of market and this new way of things that have been restructuring, a lot of players knocked out, a lot of different things going on. It's not to say that, spreads have just completely widened, liquidity is down, plenty of algorithms and bots are in there, so they're providing what is liquidity and the liquidity that is there. Trade can be a little bit more wonky, I would say, is a decent explanation. I think for you and for some of your traders out there, just conditions, right? Term conditions that can refer to so many things. We know, us traders, we know what conditions overall are. So the conditions have changed up quite a bit, but us being one of the few left, and to this point, one of the absolutely very few that runs fully systematic, it's good. It's putting us in a real position. I think it would have been, hard to distinguish between us and another firm a year and a half ago. Definitely it's not. And so, yeah, just these days, just growing AUM and onboarding, and that's on their side. But I focus on the trade side, and I focus on what new trades are out there and what kinds of different ways we can cut up the market and create something new. But what is funny is it all goes back to similar styles of trading that go back to the very beginning. I think even for your listeners or for someone that is starting off in trading, and big reason of even why I kind of want to talk on one of these kinds of things, going through those beginning stages and all the rough parts that you experience and all the trial and error and literally just grinding out in your brain, like, oh my God, is this ever going to work? The frustration, the absolute frustration when, especially, it could be something in the future, but you don't know if it'll ever work out for you. And in the meantime, what you can do is keep working at it each day, not knowing if there is going to be a goal or a place that you're going to reach where you're going to be happy at all with it. I like this for trading on those bad days, for back in the day when I had so many of them. Just cleaning the house was one of the best, most relaxing things. I mean, rather than having a nice cold beer at the end of the day, that actually really didn't help me back then. I mean, on the nice days, it feels good. On the bad days, no, it's not that great. But definitely cleaning the house was a great one, for the fact that I think it was the actor, Academy Award winning Don Cheadle, slightly pronouncing his name wrong, I think, but he had said, when you wash the dishes, you're done. You wash the dish. You don't have to sit there and ask yourself, was there a different way that I could have done this? Could it be better here? The dishes are done. Love how he put that. So, yeah, when you clean up and everything, it's like, I started here, I worked towards this, and I got there. And all I had to do was put the time and the effort. With trading, the really hard, terrible part of it is I started here, I put in the effort, I worked my butt off, I studied as much as I could, and this month I'm doing even worse. Why?
Yeah.
Always the why, always the why. And that really killed me for so long. I can remember years back having a birthday of mine where I had a party and everything, and hanging out with friends and stuff, and had the girlfriend at the time, set something up really nice, and just everything was like, would have been great. And all I can remember was that day I was not profitable, and just the absolute just frustration. And I think it wasn't even that. It was something like I'm down a few ticks or something. But for the style of trading that you want, it's like, it's either good days or no days. It's either I make some profit. I cut things just early in the day, and 6, 10, 12 trades, conditions are just not looking where they should be. I'm out and I'm relatively unscathed. Even in the end of that, it should be like I'm down because of fees, just covering the fees. But no, not that birthday. That one was terrible. It was nice. I had a birthday this month, and so I had a bunch of plans and stuff, and went out to Seoul, visit friends, have a party out there. But I made sure to start the day out with trading, and flip around here and there, and like, that's right, it was profitable. Take that, market. So
payback for that birthday.
Yeah, it's not even like that at this point, but it's like, no, it just matters mentally. That's all.
No doubt. No doubt. Okay. I have a couple more questions. Can I just kind of fire them at you? Because I'm just interested to hear your take on this. With your involvement with crypto being so heavy in it, do you, at any level, are you a crypto maximalist that sees this as like real utility and it's here to stay and doing something in the world? Or is it more of just, this is where the opportunity is and you're just going to, run this till the wheels fall off?
Well, I think if you've been watching Pepe Coin recently on Twitter,
no, okay.
It's up 17,000% this morning.
Okay.
So obviously,
right.
I mean, I think the one little note there is I saw this on Twitter. Someone had bought $250 worth of it. Now it's worth $4 million. That's still accounting, and they're just starting to sell off of it now.
Good Lord.
That's the way that market works. That's just one of the ways that things happen with just, such low liquidity and, massive, ridiculous amounts of buying. And that's also part of why our long short fund works so well. And not because we go into these low liquidity things, not at all. We don't do that. But this market can have some hype and it can have some real moves, real directional moves. But maximalist in terms of, again, personally, I don't really hold any crypto. I think the crypto that I do hold, and I have my own accounts, I'm in trades right now, but those again are spreads and I'm being paid in a different way. Things that I don't have to like look after so much. I've set up certain like kind of basis style trades where you've heard of these perpetual contracts in the futures market of crypto, where you are paid either per hour, and on some exchanges, most exchanges now have the classic 8-hour funding rates. So you're paid a tiny percent each interval, right, throughout the day. And those can obviously flip on you, and our kind of key thing at the fund is that, and basically from my side and how we've developed the algos to trade in and out of those efficiently and profitably, where a lot of other funds have had a lot of hard times, getting a trade on, and then it's making some money for a while and then getting out of it and then end up paying those fees or getting eaten on the spread a little bit because of bad orders. Oh, the whole entire trade's null, or even worse, just negative. But I'll only really be running some kinds of trades like that, some longer term things. As for utility, I think it's an absolutely underdeveloped market, and at some point, some things will come in, and there will be some massive utility for it. In the end, will Bitcoin persist? I've heard this from, what was it, Martin Scarelli, and I kind of have his viewpoint on it. Bitcoin will probably, and there will probably be something in the future that will take over, right? I mean, it's kind of an old, outdated, somewhat system, and it works well for what it is now. And as for outdated, maybe, 5-10 years later, probably there will be something else that comes in that's like, oh, there's the classic, there's a problem and Bitcoin solves this. And then like this new thing will come around and like, oh, well, this solves that for Bitcoin. That'll probably be the thing. I love the meme. I always post that on Twitter as well. Like someone will talk about like trying to diet and like, damn, they keep showing these Dunkin' Donuts ads left and right. And I just can't, keep it together. And the comment that Bitcoin solves this. So,
Yeah. Okay.
more dad
Very
joke.
interesting to hear your perspective on it. So you think, if you had to guess, you think there'll be $1 million Bitcoin, or you think something will happen before that?
No, I don't think 1 million. I don't. I think, but I love this in the crypto industry. People get really ridiculous. I saw this recently posted where Bitcoin basically did hit $1 million recently. It actually traded $1 million, but it was worth UST coin, that shitcoin of Luna that nearly went to zero and is trading about, or whatever it is now, like 2 cents or something. So if you take a 2-cent worth of something to something else that's worth about $30,000, then yeah, of course, it's going to look crazy. But people on Twitter especially love to post stuff about things like that, like, oh, it's going to go to here or there. And yeah, maybe in some exchanges, it will actually print, right? As we know in the futures industry, it prints this high, it prints a low of this or that, but does it really trade there? No.
Right.
We'll get to this point, and then there's going to be consistent bids that hold up the market, and it trades around this price, this area for a period of time. I don't think so. I don't think it'll get to that point. I think something will come along in this time span. As for 100 grand or something like that, yeah, probably. Yeah, probably could. Geez, I hate doing price quotes and stuff. You'll probably never see that from me. But personally, in my own mind, I don't know. Yeah, maybe something like 100 to 300, I could probably easily see happening, and it's not out of the realm of possibility. 1 million feels like it kind of is, but again, do I still buy something and hold it thinking like, hey, yeah, this is a possibility? Even if it was a 50-50, I'm not going to do it. I'm still not going to do it. There's other things to do in the meantime where there's better percentage probabilities that make me feel a little bit more secure. And I've taken a couple of those, 50-50 calls a long time ago in the past, definitely, and just gotten burned a couple of times. And even after you make some money, still those burns are just etched in your memory too much. I mean, it's kind of like the birthday, right? I just rather have something more secure and something I can rely on a little bit more, which is definitely like one of the reasons why I really like crypto. Generally, because there's just so many different types of strategies you can really do and develop that are in a market neutral way that just absolutely do not exist if you trade futures, which is just too bad. A lot of that is due to these perpetual contracts and the way that they trade. There's the quarterlies, there's great stuff there. Having cross exchange things, having a multitude of different exchanges that trade also just creates all these intricate things that you can do. So it's really interesting in that way.
Yeah.
But
Okay. So coming from having a lot of sophistication behind what you do, or at least your understanding of it, if you would look at the average retail trader who is not very committed and does not think very strategically or have that level of sophistication, if you were looking at it side by side, would you still think that the crypto space is maybe the easiest, best place to get started? Or would you think that the futures market is a better place to get started from maybe like a complete beginner standpoint?
I think that's a decent question. Now, funny enough there, when those guys said it at the time, it's an easy space. Yeah, when things had just ground out flat for such a long period of time and then kind of only went up, and it didn't matter what you picked, it was going up. Which, by the way, maybe I shouldn't mention this, but the firm that I had worked at, when I did try to go back on Binance and check for those traders, I don't even remember when this was. This was over a year ago now, but it had been a while after I had worked there. Didn't see him on the leaderboards, didn't see him anywhere in there. Didn't hear about that place much either.
Sure.
I was trying to make it a point to go by and check if they were still there when I was in Seoul.
It might be a restaurant now.
Yeah, back to a restaurant. Was it easy at that time? Yeah, it definitely was. Is it now? It's quite a bit more tricky. And is it easy to just get in there and make things happen? I think a big part of it are those fees. And if you're learning to trade, it creates, if you're going to be paying these larger fees, I mean, again, if we look at the ES, and you imagine you're paying $420 for a round turn, how can you trade in there? What kinds of trades does that open up to you? What's your trading going to look like then? You're going to be stuck with a few different strategies, and all of those are going to be very, very long term, very long term.
Right into the
and I think if you're starting out new, that's not the way that you want to go at all. I think that that's a very big trick in the junk industry out there that basically shows these different strategies and teaches these different things, a lot of it technical, to traders, and tells them, you know, go off on your own and try this out. This works for our little group. And like, look at this guy, he made this much today. And look at that dude, he made this. And they post up a lot of those kinds of things. But really, they teach you a strategy that you can't even verify if it actually works. And that's obviously the best strategy to teach, because whenever you get it wrong, well, that's obviously due to your psychology. And what you need to do here is buy my next course so that I can teach you about how to handle that psychology and try to draw out those levels a little bit better than what you can do right now. Some of that is just out there. It's just, it can be really tricky, and a lot of it is predatory, but a lot of it is based off of strategies that does it even really work? And that is one thing that I do like about these strategies that are more market neutral. It's a professional way of trading. It does work for this or that firm. And it really comes down to, if you're even better at it, if you execute in a better way, in a more professional style, then you make even more from it. And if it doesn't work for you, it's obviously your trading. It's obviously the way that you're doing it. So then you can work on that skill. But when you are working on something where it's like, do I even know if this works? Does the skill in entry or exit really matter? Well, who the hell knows? Because we don't really know if it works. And only if you cook up some fitted back tests, it actually tells you, oh, it does work. But then again, a lot of people don't know if they're fitting, if they're creating these things that look backward in time the right way. That's a big reason of why, you know, trading out thousands of orders, live trading, where we almost never rely on any kind of back testing for so many of these things that we do, that's really key. Are futures better for a trader? It's great that, you know, when you put up some money and you're trading and you're seeing how things work, that you really get a feel for it. Futures are really great for that. That being said, I think a lot of people can cook a lot of money really quickly, and that money is a lot of money for them. You know, it's more than they're willing to lose. So if I look at things now, you know, from where I had started and the account size I had started with, thinking like, oh, I'll just, personally, I'd started out with like a $16,000 account size, which was actually well over enough for me. I think at the worst, after a couple of bad years, I drew down 5K in that altogether, which it's not so bad for back then too. They also didn't have micros. Those
especially with the micros.
Had to be minis, had to be full contracts in the DAX. But slowly getting started that way and being very tight with things really helped. But I would definitely say, like, now looking at how things are, like, God, it's like ridiculous to not start out with 100, 150K if you really want to trade futures. I mean, anything less than that, like, all right, you're going to draw down and it's going to happen, but it's going to feel a lot different when you're looking at it and like, I've drawn down 20%, now 30%, now 40% of what I have, when you have quite a bit larger buffer to say like, okay, 10%, that's not good, but it's. So anyway, the other thing with on the crypto side that I think is a lot better for a lot of traders, that you can start out with, and I've worked with a couple of guys where I tried to teach them a little bit about this kind of stuff. I had them start out with $50 accounts and get trading, and they're able to get profitable in a really short period of time, within a month and a half-ish. and then start with that $50 account. And the worst they ever draw down is like $1 to $5.
Wow.
And that's mostly like, that's absolutely possible. You can do that because you can do trades where you're trading for literally fractions of a penny. And that's what you really should start out with. Kind of like starting out
Sure.
with one lots in futures. You're actually putting orders into the market. They're real. You can see them on the order book. If it's a limit order and if it's a market order, you can know what it feels like to say hit market, and then you got to fill at whatever price was actually there at the market at the time. I did a lot of demo trading way back in the beginning, and trading in a quick, fast-paced way. I saw that there was a lot of problems with demo trades, such as if you put it, let's say if you put out a limit order in the middle of the order book, what I like to call the midpoint between the best bid and best offer. And a lot of sims out there would actually give you a fill, even if you put a bid out, but the next offer was a sell. Just an order went through the market and you were someone in there, so it just gave you a fill at that price. Another problem was there was another sim that, let's say you put out a limit order on the best bid, but then the best bid pulled and the next best bid below that pulled and the next two pulled, and then your order gets filled. It's a sim, but it trades the next trade that goes through. It would actually give you the fill on the very next fill that happened. So your order was actually here, but they give you a fill way down here. So it's another reason why these stupid sims can show people like, oh man, I'm such a good trader. Yeah, right. Yeah, you think so. There's the other issue of if you also used limit orders and you place it on a bid on an offer, and then the very next order that comes in actually gives you that fill. I would see a lot of people in the leaderboards on different forums, having these amazing days where every single trade is profitable because they're trading in bonds, and every single trade is fill, constant, one tick, thousands of times. So easy for them with that. But it's just a joke. And it's like, you can play in, online space. What is that? Oh, what's the game that I'm thinking? Whatever, like a Candy Crush type of game. You're just clicking away, and it's fun. It's enjoyable. It feels nice to the ego, but you get trading real orders in the market, and even if it's on tiny size, at least you're doing something like that. Now it's a whole nother thing actually moving real size in the market, but you have to start somewhere. And I was someone that started off trading one lots from back in the day, and it does really help. I would personally say I did way too much sim trading, which still wasn't even that much, but it just really gives you a kick in the nuts and gets you moving forward when you go live. But having a way to do that, definitely crypto gives you that. You just have to really look around for lower fees so that you can do a few more trades, and then start opening up different order books and trying different things. That would really help me in the futures arena when I traded so many different things. Trading something like, God, 5-10 year bonds, and then going over to something like the DAX or heating oil, R bombs, things like that. Things that are just so illiquid or so fast, something like the NQ. And then going over to crypto, where every single day I have to trade in several different contracts, and they can be night and day difference from each other. And then you go to a different exchange, and that's also different, completely different there. I mean, Dogecoin, our favorite that we keep talking about, you might be on one exchange where their tick size is just different because it's at a different decimal, so it moves just so slowly. It's just tick up, tick back down, tick up. And so it can be slow that way. You go into a different exchange where it's a couple extra decimals possibly. And I think for Doge is mostly either a specific price or just one extra, depending on exchange. But other exchanges, they do have like multiple extra decimals, and the order book just goes wild, and it's just so wide. And If you're trading on something like Bookmap, then you just have to absolutely zoom out and look at it at such a fractional level. But having the experience in futures really helped that, of trading different orders and seeing how things work, and now being able to work in completely different styles and having to do that day in, day out too. That's been key. So if someone did want to try that, I think it's a much better area and arena to throw out some live trades and not be taking too much heat. I do think that the whole industry of being a funded trader has come a long way from where it had been, where there were a lot of predatory companies out there that really just wanted to keep things so tight on you so that you would just, even if you got funded, you just end up blowing yourself up anyway, because they just either the trailing stop loss, or charging you large fees, this or that. Things have gotten a lot better, and that is a way too where you can, be watched by someone, or at least have that feeling. Again, it got really serious for me when I actually started trading for others. So it's something that does help.
Yeah, interesting. If I could ask you one more question, because something that I think is like a huge grift right now is just crypto trading bots in general that you can, get out there and get. And your world being so active with trading bots, and you obviously have a lot of experience with them, working with them daily. I'm under the impression that every single thing that is a trading bot that you can have access to, if somebody's gonna, it's out there, it's a crypto trading bot that you can, buy for a one-time $5,000 or lease it or whatever, 100% scam. 100% isn't going to work. 100% don't even mess with it. Are you under the same impression? And what is your thoughts on just trading bots that are out there that people can access?
That's an interesting perspective, that it wouldn't work. I mean, I haven't directly tried it. I think I'll go out there and I'll buy a handful of them. Maybe I'll use them, in my own trading, and we'll see how things go. The marketing is so good. I don't even bother with that. That's just an absolute joke out there. Yeah. It's an absolute joke. Working with someone that has created algos for not just hedge funds, because he's worked for different hedge funds, but some of the major banks. I remember he also worked for Deutsche at one point. But the fact that, working on these things is so rough and so grueling. And when they do get going, a real true bot needs kind of constant work and care to work things out. And you always kind of want to be improving it, and conditions can change over time. And so even the algorithms that we have running for the long short fund, which it's not a spread, it's either you're long or you're short, or it's possibly targeted through volatility. So volatility targeting is a factor that goes into that. That's also little areas that you want to improve on, not just entry and this and that. So it's something that takes a constant amount of work. That being said, could there be bots that are out there that are available for sale? We've considered taking on board clients where we would be able to trade for them through our bots, but that's a night and day difference, where we're just managing. It's managed accounts. That's something different that way. Would there be bots that are actually profitable out there? Hell no. Hell no. That wouldn't exist. If it was actually profitable, or the ones that we have that trade, and not just consistently profitably, but it's just daily, okay, it's just churning out this much consistently. And it just depends on what kind of liquidity is in the market, and it will make money. And as long as conditions are there, and we spread it across several different shit tokens and coins or whatever across the markets and exchanges, then if it makes money, you don't give it away. You do not. And edges that are available, or that are out there in markets, and something that works constantly, it can easily be worked out of the market by having too much size go into it. There's so many strategies out there that really just go to nothing because they're constrained by capacity. So the idea that there's going to be some bot that like, and I'm sure most of them are just based off of just simple things, you know, moving crossovers, and when it reaches X level buy, when it does this sell. Yeah, you can put those on and they can, you know, run this or that way. It's a very easy process to make something like that. Very easy marketing to create the back tests for it and run it for a month, run it in 200 different crap coins and see which one trades out well profitably over a month, and then just produce those as results. Marketing would be so easy for that. Is it going to be junk? Yeah, it'll quickly show you that, like, if it takes enough trades, you know, or as Arnold used to always say, if it bleeds, you can kill it. So that kind of bot.
Yeah, very good. It's good to hear you say it, and I hate because there's so much marketing around it. I see these things all the time. Just this idea that there's this bot out there that somehow you can get access to this, and it just is going to print you money. And the idea is so flawed. And I would consider myself somebody who doesn't know much about algorithmic trading, but I know enough to understand that these things have to be constantly monitored and adjusted, and the work that goes into even developing one and then keeping it going. There's just no reality where you get to just turn it on and it just prints you money. It's chasing a goose that lays golden eggs. But it's nice to hear you say it as somebody who actually knows about these things. Let me say this. You've been very generous with your time, and I'm going to let you go. For anybody listening that maybe would like to keep up with you, I actually had a very hard time finding anything about you online. Is there a place where if somebody just wants to keep up with you that you would send them, or is there anything that you would have as a parting word for people?
Yeah. Just generally, I'm pretty popular on on the social media, on my Twitter. I got grandma to follow me last month, so that's one up. I think it's basically my Twitter at Andres Trades. I go by Andres, really.
Okay.
Andrew is technical name, but Andres from all friends and coworkers out here or on the online. And then you can also find me at Andres12 on the Discord. Be careful there. I'm sure there's scammers out there, so I'll make sure to give my exact. But yeah, again, I'm trying to work up Twitter in general. So many years of just messing around on there or whatever. I should probably take it a little bit more seriously, especially looking at the fund overall. And I'll be posting, little things here or there, so might want to check that out. But on Discord, Andres12 hashtag 6368. So anyone else is fake.
Okay.
But again, yeah, watch out for scammers, and I don't know. There's some chats on there that you might find me in. Probably some of your listeners, even if they're on Discord, I'm probably in a couple of their little groups, maybe. Who knows?
Okay.
I definitely want to give a shout out to Basis Boys on Discord. What's up?
Okay.
Kicking it live. Here we out here.
Yeah, here. Very good. Well, I'll make sure whenever this goes live that we actually just put those in the description as well, so people don't have to remember it. They'll know where to find you. So, listen, very cool chatting with you. I'll end the recording and then I'll say goodbye to you off the air. But we'll say goodbye, and I really appreciate you coming on.
Thanks. It's been a lot of fun. Really, actually love the podcast that you put out. I mean, love the energy and everything too. Free flowing,
awesome.
Just really cool conversations. Yeah.
Cool. All right, brother. Talk to you soon.